Bitcoin dominance has now printed 7 red candles in the last 10 weeks, and while the conversation on crypto Twitter keeps circling around the cycle top, something very important is happening quietly in the background. The Altseason Index has climbed above 60%, which is no small move. If you're not already thinking about positioning for the next altcoin rotation as we step into the final quarter of the year, chances are you'll end up missing what could be the best rotation play of this entire cycle. In this video, we're going to break down exactly how altcoin rotations unfolded in past cycles, and why this time around things could play out with a slightly different rhythm. We'll look at some of the most crucial on-chain and market indicators that are flashing signals right now, and we'll map out the scenarios that matter for anyone looking to stay ahead. Stick with me till the end because I'll also share a couple of clear triggers that suggest we might be standing right on the edge of the biggest altcoin move of this cycle in the coming weeks. If you're someone who values deep, data-backed insights instead of recycled narratives, then hit that like button now. It helps the channel grow and motivates us to continue bringing you these detailed breakdowns. And of course, if you haven't subscribed yet, you're leaving serious alpha on the table. Now let's dive right into it. Bitcoin itself has had a tough stretch, especially as we step into the dreaded month of September. Seasonality is once again living up to its reputation, with Bitcoin already down more than 13% from the highs. That weakness doesn't surprise anyone who's been tracking our analysis. But what has caught many off guard is the resilience of ETH against Bitcoin during this pullback. That relative strength is a key piece of the puzzle. Before we dissect what it means for the current cycle, we need to step back and understand how altcoin rotations have historically unfolded. The classic pattern of capital rotation has remained strikingly consistent across multiple cycles. It always begins with Bitcoin asserting dominance and pushing to new highs, often with its dominance climbing above 70%. This is the stage where smart money positions heavily in Bitcoin, treating it as the safest bet within crypto. Once Bitcoin's momentum begins to plateau, the market naturally transitions into Phase 2 rotation into ETH. The ETH-BTC ratio starts strengthening, and ETH begins outperforming Bitcoin on a relative basis. This usually coincides with Bitcoin dominance starting to roll over from its peak. Phase 3 sees capital moving from ETH into large-cap altcoins. These are tokens like Solana, BNB, Sui, and other established layer ones. These have strong fundamentals, institutional attention, and deep enough liquidity to absorb large inflows. The final stage is when retail FOMO truly takes hold. Capital begins rotating from large caps into mid and small cap altcoins, fueling parabolic moves in projects that often have weak fundamentals but thrive on narrative-driven hype. Historically, the key trigger for a full-blown alt season has been Bitcoin dominance breaking below 50%. Once we've seen sustained breaks under this level, altcoins have consistently outperformed Bitcoin for months at a time rather than just weeks. The Altseason Index, which tracks how many of the top 50 altcoins have outperformed Bitcoin over the past 90 days, usually needs to hit 75 or higher to confirm we're in a true alt season. That threshold has consistently marked the beginning of broad-based rallies, and we saw it play out clearly in both 2017 and 2021. In 2017, the final rotation into altcoins ended in pure euphoria. Smaller caps exploded, and it felt almost impossible to lose money. I remember watching my portfolio pump for months without any real drawdowns. It gave the illusion that it would just keep climbing forever. At the peak, the total altcoin market cap went on a 7 to 8x run in just a couple of months. What that really means is that the average altcoin did a 7 to 8x in that short span. The stronger performers, though, went on to post 100 to 200x gains. Personally, I held around 30 to 40 altcoins in my portfolio at the time, and I still remember the feeling of seeing every single one of them ripping higher at the same time for about 2 straight months. Certain narratives like layer ones were hotter than others, but it didn't matter much because everything was pumping together. The projects with stronger narratives just pumped harder. Fast forward to the 2021 cycle and we had another massive run, though it didn't quite match the insanity of 2017. This time the pump was more selective. Categories like layer ones, DeFi, and gaming had their own phases of outperformance, while a fresh narrative like NFTs burst onto the scene and took off in a way nobody expected. But even with new narratives, the market was still largely retail-driven, with only a handful of celebrities beginning to step into crypto. The tectonic shift where now hadn't happened yet. That brings us to the current cycle dynamics and the transition in market structure we've seen unfold since then. The 2025 cycle is fundamentally different, and understanding these differences is crucial if you want to position correctly. The biggest shift is the speed and magnitude of institutional adoption. We now have sovereign wealth funds, pension funds, and Fortune 500 companies with significant cryptocurrency allocations. These players aren't speculating on microcaps or meme tokens. They stick with the top 10 or top 20 by market cap, which makes this cycle much more top-heavy compared to the past. Another key difference we've often discussed is the sheer number of tokens in circulation. Back in 2017, there were maybe 500 to 1,000 legitimate projects competing for liquidity. Today, we're looking at over 20 million tracked tokens. That's a massive increase, and it means capital is spread across a much wider universe of assets. Liquidity is limited, and instead of a broad rising tide lifts all boats effect, we're getting selective rotation. We're also seeing narrative-driven pumps become far more pronounced. Instead of broad-based altcoin rallies, specific sectors capture institutional and retail attention for weeks at a time, whether that is artificial intelligence, restaking, or DeFi. These mini-rotations create huge opportunities if you're in the right place early, but they leave the rest of the market completely dry. The reason most people have been getting wrecked this time is simple. They base their rotation strategy on previous cycles. They expected the same old playbook where Bitcoin moves first, ETH comes next, then large caps, and finally an alt season where everything pumps for months. But the rotation cheat sheet that worked in 2017 or even in 2021 just doesn't apply anymore. Yes, we still see liquidity rotate from large caps into smaller names, but the broad months-long alt season is missing. The window for altcoin runs this cycle has been shorter, sharper, and far more selective. Liquidity chases the narratives with the widest mindshare, leaving everything else starved of attention. So the real question is, how do we play rotation in this cycle? Before diving into the playbook, let's first check some key metrics to understand where the market stands right now. Looking at the market right now, several metrics are flashing bullish signals for Bitcoin to altcoin rotation. Bitcoin dominance has been sliding since topping at 66% in June, and even after a couple of crashes, it remains below the long-term ascending trend line I highlighted earlier. That inability to push higher during corrections is historically bullish for altcoin performance. The ETH-BTC ratio has also been climbing since May, showing that the first phase of rotation into ETH is already underway. There are a couple of specific triggers pointing towards upside volatility. The others versus ETH chart has RSI at 25, which is the lowest altcoins have ever been against ETH. Back in 2021, a dip below 30 kicked off a 100-day altcoin rally. When this RSI breaks above 45 and trends higher, it usually marks the beginning of the final rotation where money flows from ETH to large caps and eventually into smaller names. We are already starting to see early signs of this phase. The second key signal is Solana versus ETH. Solana has been down nearly 50% against ETH since May, but it is now showing strength after months of bleeding. The 0.04 level could mark its bottom, with 2 consecutive green weekly closes in what has been a tough market. This resilience matters because when Solana stabilizes, it often indicates the broader altcoin market is preparing for rotation. Overall, altcoins are holding their ground, and if Bitcoin pushes higher, we may be on the verge of the next leg of altcoin outperformance. Now let's talk strategy. The key to successful altcoin rotation is recognizing the phases and positioning accordingly. Phase 1 starts with ETH establishing itself convincingly above its all-time high with multiple daily closes over 5,000. We've seen quick wicks above this level before, but what matters is sustained strength, which only comes with consecutive daily closes that confirm a true breakout. Once that confirmation is in place, it usually signals that the ETH-led portion of the rotation is underway. At that point, my approach would be to gradually scale out of ETH and begin rotating into large to mid-cap ETH beta plays like Avi, Pendle, and Pepe. Of course, I'd also make sure ETH-BTC remains strong and Bitcoin dominance stays under 56% to confirm the setup. Phase 2 is the rotation from ETH into large-cap altcoins such as Solana and Sui. These typically benefit from spillover flows as investors search for higher beta exposure beyond ETH. The focus here is to identify which large caps have the strongest fundamentals, credible institutional support, and a clear narrative tailwind. Phase 3 is where narratives really start driving outsized moves. Right now, artificial intelligence tokens and real-world asset tokenization are the 2 strongest themes. The key in this stage is filtering out noise and looking for projects that have institutional participation or tangible utility rather than just retail hype. If I spot compelling narrative trade opportunities, I'll be sharing them on X as I take positions. Make sure you're following there to stay ahead of the curve. And if you want more regular updates and discussions, you can join our free community Discord where I post market updates and you can interact with other like-minded members. Links are in the description. Now you can plan rotations all you want, but without discipline you'll likely end up over-rotating. Managing risk during altcoin rotation means sticking to predefined exit strategies. A tiered approach works best. Scale into positions as confirmation signals trigger and scale out when key resistance levels are hit. For allocation, a balanced structure could be 30% in ETH or other top 10 names, 40% in top 20 altcoins, and 30% in narrative plays. That way you capture exposure across the rotation while controlling downside. Allocation should always be adjusted based on portfolio size and average entry. Timing will be key as we move into September. Historically, September has been a weak month for crypto, so a ranging market is possible. But this year feels different, and the odds of a massive dump appear slim. The Fed's rate cut on September 17th is already priced in at an 87% probability. If Powell pairs it with dovish commentary, it could provide the liquidity boost that sparks full-blown altcoin season. Key levels to watch are Bitcoin dominance breaking convincingly below 56%, the ETH-BTC ratio holding above major support, and the Altseason Index pushing past 75. If these signals align and sustain through September, the acceleration phase of altcoin season could extend deep into Q4. The action plan is simple in structure but requires patience and discipline. Step 1 is securing core ETH exposure if you haven't already, using dips toward 4,200 as prime accumulation zones. Step 2 is to identify 3 to 5 large-cap altcoins with strong fundamentals and start position building into relative strength. Step 3 is allocating a smaller portion into narrative-driven plays, but always size these positions conservatively given their volatility. The most crucial step is defining your exit strategy before entering. Rotations can be explosive on the upside yet ruthless when sentiment flips, so predetermined profit targets and stop losses are essential. What makes this setup unique is that while the opportunity looks like the strongest in years, the rotation is far more selective. Stock picking and narrative recognition matter more than ever, while institutional flows are stabilizing the market but concentrating liquidity into fewer projects. Navigating this shift with precision could be the difference between capturing generational wealth and getting left behind. Which altcoins are you positioning for into September? Are you leaning toward the ETH ecosystem or betting that other narratives will lead the next pump? Drop your thoughts in the comments below, and if this analysis helped clarify the current market dynamics, smash that like button and subscribe for more in-depth crypto strategy content. Thank you for watching, and I will see you in the next one.